Most of the people will end up losing money in this cycle. Why? Because they don't take profits. And if you don't take profits, you don't make them. You won't make them. You will lose money. So it is really important for us to speak now when to take profits, because most of the people won't see it coming, but crypto will crash again and you have to take profits before. So this is why it is really important for us to speak now about it. So I'd say let's not lose time and start right into it. Never have the times been more unclear where we are standing right now in the cycle. Some people think that the top is already happening in October. Some people tell us that the top is coming in December. Some people also say the cycle is going until 2026. And some people even say we will break the 4 years crypto cycle. But in reality, nobody knows. And we have to be prepared for every scenario. So this is why we are talking about it now, because when we are going into a crazy altcoin season, and yes, it could be short and hard, but it will come. And we have to talk about taking profits before everybody is losing its minds because of those crazy crypto prices. Because when crypto is pumping, nobody can think clear. So this is why we have to talk now. Where are we standing right in the moment? The current cycle is already nearly 1000 days old. So that means that the peak is due in roughly 70 days. So there is not a lot of time left for us to take profits. The last bull market in 2017 lasted for 1068 days. The 2021 cycle lasted for 1061 days. And there is not a lot of time left before we're going to the peak. It doesn't mean that this scenario will happen, but we have to be prepared for the first scenario to happen. Because if this scenario is happening and you don't take your profits here, then you take your profits from the peak all the way down to the bottom. This is exactly what happened to me in my first bull market 2017. So yes, we're entering the hot phase. We see soaring trading volume, we see increasing Google search trends, and we see market euphoria also coming from retail. And yes, at the moment we also see some sharp pullbacks, which is very normal for the phase we're actually in. It is the pre-peak stage. And this phase, in my opinion, all of the times looks nearly the same. So in the first scenario, when would we see the peak? The peak should be somewhere between October the 15th and November the 15th. The most likely sweet spot is in the 4th week of October, as I already showed you here. So somewhere around Halloween, and yes, it could be scary afterwards. So better be prepared to take profits in time, because what could come next would be a bear market. So this would mean that we would see drawdowns of 60% and more happening. They could definitely happen, and nobody can tell you what the exact scenario will be. But I would always be prepared for the first scenario. Then if it's not happening, if it's going up again, it doesn't matter. We have already taken our first profits. And if it's going even longer, even better for us, then we have more money to play with. But what is the perfect exit strategy? Where do you take profits and how do you even take profits? I'd say let's look at some of the best exit strategies. So before we start, it is really important that you know yourself. You have your own goals, your own targets. Please write them down and stick to it. You have to follow through with your goals. You have to stick to them. I know if it's getting crazy, some people completely lose their mind and won't stick to their targets, but you have to stick to your targets. Only if you stick to them and if you take your profits, you will be a big winner in this cycle. Otherwise, you might lose your whole portfolio. And I can tell you right before we're starting into the different exit strategies, there is no universal solution. So you have to combine some of those solutions. With taking profits, there is no perfection. Nobody is able to buy exactly the bottom and sell exactly the top. Nobody. And if you always want to be updated where we are heading right now, please make sure to smash the follow button so I can always keep you up to date what's going on in the crypto market and how you can benefit best. So the first exit strategy is one of the most obvious strategies which we have already talked about. It is the exit by cycle strategy. If we want to exit by cycle, we have to ask two questions. Is the 4 years cycle model still intact? At the moment, it clearly looks like it is intact. This would mean that our peak would be somewhere at the end of October. And yes, we have to keep in mind when will the cycle end. There is different models out there, but always be prepared for the first one. Because if the first one is happening and if you don't sell, you know what's happening. You take your bag all the way down. Another strategy I really like is the exit by target strategy. So I'd recommend you write down all of the coins you own in an Excel, for example, and put your targets for this coin. So if your overall target, for example, for Bitcoin is 200K, you can slowly start selling. The first of 6 parts at 150K, the second of 6 parts at 160K, the third of 6 parts at 170, and so on and so on. So you still have exposure until the end, but you're de-risking, which is really important. If you're not de-risking, you might lose your portfolio. Another strategy you can definitely have a look at is the exit by return strategy. It is well suited for volatile assets, so please again write down your targets and how much return in percent you would like to gain. This is now an example of Solana. For example, you bought 90 Solana and purchased them for 9K. We can say Solana has risen by 200%, so you've made your 3x. So it would mean that you sell the first of 3 parts for 9K. That would mean you have the whole money out of the market. You put in Solana and the rest is free money. So you can, for example, take half of that money and take profits when you reach another goal, or you can wait until it hits another target you're setting. So as you can see, it could be really wise to combine some of those strategies together. Another plan that might be more speculative is the exit by portfolio strategy. You look at your whole portfolio and set a target for your whole crypto portfolio. This means, for example, if you're starting with 10K and your goal is to build up a portfolio of 100K, then you sell your whole portfolio at 100K. This could be risky because if your portfolio is not reaching the 100K, you also might drive your whole portfolio down. This is very individual and depends on personal goals. So please, it is always really important that you set realistic goals. If you're setting unrealistic goals from the beginning, you won't make it probably. So I'd recommend you don't set your goals by portfolio, you set your goals by coin. And it always matters when have you bought the coin, because my entries might be different from your entries. So it is really important for you to keep in mind what is your personal goals. Another strategy I really like is the DCA strategy, the dollar cost average strategy. This is a strategy I also recommend for buying coins. For example, you want to buy a coin with 1K, you can buy 10% of this coin every month. This is called DCA, dollar cost averaging. And you get a very good average price by entering coins with this strategy. But you can also exit a coin with this strategy on the other hand. This means you would sell 10% every week. And so you have a bag running until the very end, which gives you exposure until the end, which can be good or bad at the same time. But if you're seeing it going down, you can always change your mind and then sell more than you would have liked in the beginning. My advice for you, there is no perfect exit strategy. It is simply not possible to make the perfect exit. So please just keep in mind to be prepared for every scenario. I would recommend for you to pick a mixed form of price target and percentages. What is really important for you, and I would definitely recommend, is that you take your risk off the table. Because if you make some profits, you can use them, for example, again in DeFi strategies. Because only realized profits are real profits. And yes, you can leave a moon bag on the table. You can let it run and see if it will moon. My crypto portfolio is always built with 50 to 60% in stable coins. And with those stable coins, I build my DeFi strategies. It doesn't matter for my strategies if prices are going up or down, if we're in a bear market or bull market. Those are so-called delta neutral strategies which earn me money 365 days a year. And if you have any questions to those strategies, feel free to just ask down in the comments. I would really like to help you, because with those strategies, you can let your gains, you can let your profit work for you, even in a bear market. You have to understand, you can earn money in crypto 365 days a year. It doesn't matter when, it doesn't matter if we're in a bear market or prices are crashing. It doesn't matter. So let me know down in the comments, are you already using one of those strategies? Is it the exit by cycle strategy you're preferring, or the exit by target strategy, or the exit by return strategy, exit by portfolio, or the DCA strategy? I would really like to know how you are taking your profits. Keep in mind, only realized profits are real profits. So please take your profits. Better safe than sorry. I hope I was able to give you some interesting insights in today's video. If you liked the video, please feel free to smash the follow button, smash the like button, and share this video with your friends. Thank you for watching, guys. See you soon.